In 2020, this company was caught fabricating $310 million in fake sales. Their executives were fired. Their stock crashed 80% in a single month. America's biggest stock exchange kicked them out. But today they have 30,000 stores across the world. They've beaten Starbucks in China, and they're about to return to Wall Street. Any other company would have been finished. This is the story nobody expected to happen. This is Luckin Coffee. 2017, Beijing. A group of former taxi app executives had one big idea. Starbucks was dominating Chinese coffee. $6 a cup, long lines, complicated menus. They asked one question: what if coffee in China was cheap, fast, and delivered to your phone? Luckin opened its first store in Beijing's Galaxy Soho in October 2017. Medium, no barista small talk, no Instagram seating, just coffee, ordered on an app, ready in 70 seconds. The price, $2. Within 18 months, Luckin had more stores in China than Starbucks. By May 2019, the company went public on the Nasdaq, making it the fastest company ever to go from founding to IPO. Medium Harvard Business School made it a case study. Investors poured in. The valuation hit $12 billion. Everyone called it the Starbucks killer. But behind the glass and the app, the numbers were a lie. In January 2020, short seller Carson Block and his firm Muddy Waters Research published an anonymous 89-page report claiming Luckin had falsified financial and operational figures, that the number of items sold per store was inflated by at least 69%. KTPL. Luckin denied everything. Then 3 months later they confessed. An internal investigation found the COO's office had fabricated the company's 2019 sales by around $310 million. Wikipedia. The CEO was fired. The COO was fired. Trading was suspended. Luckin was delisted from Nasdaq on June 29, 2020. KTPL, the stock, which had hit $50, was now trading at $138. Goldman Sachs seized and sold the key. Chairman's Luckin shares after he defaulted on a $518 million margin loan. KTPL investors worldwide had been wiped out. 3,000 stores were shut overnight. Every analyst said the same thing: it's over. They were wrong. While the world was writing the obituary, a quiet engineer named Guo Jinyi took over as CEO. He believed that if Luckin had failed, he'd be seen either as a fraudster or a fool, so he was determined to save the company with no other way out. VC Institute. He did 3 things nobody expected. First, he cut everything. Marketing spend dropped by 60%. Non-core projects were abandoned. The company went lean. Cornell SC Johnson. Second, he reinvented the menu. Luckin launched 113 new beverages in 2021 alone, compared to Starbucks' 20 hits like coconut lattes and cheese teas that accounted for up to 30% of sales. Cornell SC Johnson. Third, he went deeper into China instead of running from it, expanding into smaller cities, franchising to local partners, going where Starbucks had never bothered. By 2023, Luckin had surpassed Starbucks in China revenue for the first time. Cornell SC Johnson today. Luckin boasts over 30,000 outlets across China, triple that of Starbucks' roughly 7,000. Cornell SC Johnson. And now the company is preparing to relist on the very same Nasdaq that kicked them out, with 5 stores already open in New York City and more on the way. Darpan Saxena. Let that sink in. They fabricated hundreds of millions in sales, got caught in front of the entire world, lost everything, and then headlines quietly. Without they built the largest coffee chain on planet Earth. Luckin didn't survive because the fraud was forgiven. They survived because underneath the fraud, there was actually a real business. The product was good. The model worked. The mission was real. That's the most dangerous kind of company. One that fails publicly and succeeds silently. Watch